is to
Right.
set a budget.
Right.
As an auditor would tell you, and he could describe it better than I could, it is, they audit you on how accurately you think, that they think you intended to be, whether the variations are outside of norms, whether it was understandable when you have a specific item that was over budget, or something you budgeted too much for that they think you might have misappropriated funds somewhere else. And they will give you either a clean report, or that you have some material deficiencies that need to be reported to the state, or needed to be reported to Emma, the National Public Finance database, if you have outstanding public debt that needs, it's a material event that needs to be reported to any bond purchasers that you've sold debt to because you're mismanaging funds. In general, there is some leeway here. It's best intentions with the operating budget, and you go with past history. If you
Okay.
know something's coming, you budget it in additionally.
I'm
For
used to
instance, there will
forecasting.
always be an election line item expense on your, in this case in point, there'll always be an election line item. Some years you don't have elections, so it'll be 0. And then the next year it'll be, 12. But you may have an uncontested director's election, and so it'll be 0. So you over budgeted for that amount. You'll run a surplus. No auditor is concerned with that.
Right.
But in general, yes. But I gotta be more specific with it.
No, I appreciate that because, again, I thought I was,
You are not
I
bound
thought
to
we
your
were
operating
legally
budget.
bound to work within our budget. That's
You are
something
not
else
bound to work on your, if you set a budget, because think of it this way, it's amendable anyway.
Yeah, yeah, I was gonna ask you that.
So
question.
if it was just a simple
Yeah.
protocol issue of, okay,
Yeah.
amend the budget, now we can spend it,
Right.
that's a waste of,
It is. It is.
of
Well,
time.
that makes sense, yeah.
And so if you go over budget, it's more of an indicator of long-term progress. Where is your operating fund balance for the last 5 years?
Right.
Are you going up? Are you maintaining? What is your goal here?
Right. Like I said, proper management.
Exactly. And your auditor, to my knowledge, has given you a clean report for as long as we've been accurate.
Okay. Yeah, I signed a check yesterday for almost $30,000 for County of Galveston for elections.
It's
Yep,
it's not ideal.
yeah, I do, okay.
Wait, you said check for AEI for $29,000.
That was my question. Okay,
Oh,
your turn.
real quick, since we're still on page 16, he was talking about some the unexpected variances here. I'm gonna be a little more specific. 13,900 utilities, I'm sorry, insurance, WC, what is that for?
Who's coming?
Or comp.
I have that one too.
Oh, yeah, workman's comp. Workers' comp. Did we have any,
They came and audited us, and the payroll was higher than what they had anticipated previously, and that's why.
okay, that's what that is, that's right, WC, workman's comp, yeah.
Dang,
All
I
right.
didn't know what that was.
And I guess, windstorm went up probably because of Harvey, right?
Yep.
Yeah, yeah, all right.
Also, though, we added some, a couple of items into our coverage. There were a couple of items that needed to be added, and they took that into account also.
Okay.
On
Do you
all-
happen to remember what those items were?
No, not off the top of my head, I
No,
can get
that's,
them for you.
I'll tell you, John,
Yeah.
if you have, if you rehab or fix or replace any facilities, the value of those insured facilities goes up, which will increase your premium. But that should only happen annually. So I don't know if there was something else where you added
Well,
something new.
no, actually what's happening on that one is if you look at the budget, the annual budget column, which is the second to the last.
Correct.
You can see where we actually budgeted almost 31,000. But again, when you take a look at the, we pay our premiums once a year.
Right.
So what happens is that in the month that you pay it, it's gonna look out of line until you get down towards the end of the year.
Oh, okay.
And the budget catches up with what you pay.
I understand what you're saying.
Yeah.
Okay, I understand.
Oh,
what
I
you're
thought you
saying,
were looking at
Yeah, I see that.
the insurance flood. Sorry.
Okay, I understand. But yeah, workman's comp definitely has changed dramatically.
Yeah, but the workers' comp changed.
We won't talk about all the other stuff because I already know where that's from, so.
Well, you're welcome to discuss any of this.
Well, no, hey, you're not cheap, so.
I'm not that expensive either.
You know, we can discuss that later, you know, I mean, the actual agreements that have been signed. I mean, just for me, because I really don't know what it is, what's an STP permit? STP permits?
Sewer treatment plant.
What page?
What's that?
Sewer treatment.
Okay, so, you know, this is just standard stuff here I'm looking
Unavoidable
at,
fee.
because I see a big change here. The
So-
variance of
so
$10,000, that's.
It's on
you know,
page
this-
15.
You're right, oh, I'm sorry, page 15. On page 15. Because of this, you know, they're just standard permits that we're accustomed to budgeting for. I'm kind of wondering, I guess, why we missed that one.
Because that permit is not every year.
Oh, it's not, okay.
Yeah, so we might have forgotten that this was the year that we had to do the big one.
Okay, that's the one that AE and I's been asked to,
Yeah.
yeah, okay. Was that something we normally did in the past? We had an engineering firm file these permits?
I think
Is
they
this something we kept
always-
in-house?
they always-
This is
They-
always outside?
They're the only,
Always
They're the
outside?
only ones that can.
only an
I believe.
engineer is
Okay.
capable
Oh,
of doing that.
oh, is it, okay, all right.
Whoever you use, sometimes you
Right.
could use a third party or
Right.
use the district engineer, but there are some engineering firms that cater to that as a service.
Right, okay.
But there's a lot of engineering work involved in that.
I'm always looking forward to save money. That's the way I am. No, I do, you know, one thing's been concerning me was the capital projects fund.
Page,
Oh, I'm sorry, page 7, doesn't really matter, I mean, you know, this is just an overall general question. This would've been back in, whatever amount that was, when it was agreed to raise $30 a month. And
Okay.
that money was allocated for the wastewater, the rehabilitation project.
Okay,
That money's been put into the general fund, and it's
Yes.
not really trackable. It's just blended in there, and I don't understand why. Now I think I possibly understand why it's not in the capital projects fund, because you're saying only bond money goes in there.
Correct, but it
Which
could be
then,
tracked
why didn't we
separately.
establish a special fund for that money, which we clearly stated, well, I didn't state it, that money was gonna be only used for the rehabilitation, and it's not trackable, it's just blended right in. You know, we need to find a way to break that up.
That is
well,
a
on
very good.
Monday,
do
you're
we
going
now?
to get that
Right.
breakdown,
Okay, good,
okay? And as Michael said, if you wanted to, you could transfer those funds
Right.
over to the capital projects fund,
Now,
but
Well,
I'm
just-
not in
but
favor
that's
of
something
that.
with
well, I mean, yeah, you could
Yeah.
track them separately.
Well, yeah, I
Yeah,
mean,
yeah,
which
yeah.
is what,
That's
Yeah.
easily.
I just think we
Yeah.
need to be able to see, you know, what we're spending on these projects, right, Aaron? Right? You know, I mean, right now, it's just being blended into one account. I mean, and it's easy to lose track of it, it really is,
but on
so-
Monday, you're going to get a summary
good, okay.
of what actually was billed,
right,
based on the number of connections for water and the number of connections for sewer for both of the districts.
Right.
Okay, and then the amounts of money that we have spent, you know, basically related to these capital projects that were defined earlier in the year.
okay, good, you'll bring,
Yes.
detail
Yes,
with regards to that.
And you're
Okay,
gonna get
yes,
that on
Yeah,
Monday.
yeah, I would definitely like to see that. Because my opinion isn't the greatest right now with all that, so, actually, that was my biggest one, really, so, I mean, the other stuff is pretty much self-explanatory. I'm not an accountant, but, I mean, you know, I've reviewed these in the past. But, and yes, I'm glad you're gonna reclass the engineers.
The engineers,
Yes,
yes.
yeah, because that caught my attention, before. You know, I don't wanna spend a whole lot of time here, because I know there's other questions out there, so, I'm good, thank you.
Eric?
I'm good.
No questions?
Okay.
Y'all covered?
I do need to discuss a couple things with you guys. And then I'm sure you might want to discuss some items with me as well. Just, you tell me when you want to do it. or
Well,
how.
let me get the questions from the floor first.
Of course.
For Lydia, then we'll discuss that. Okay, questions from the floor for Lydia?
Ready, sir.
Page. Find it. 16. Bank charges. We budgeted 4,400. What do banks do for us? That we spent 298.
We have,
Oh,
that's right.
they
Six,
process all of our deposits, for the ACHs and everything, and is it credit cards as well? Okay.
Well, it's gonna be bigger next year because we reclassed some stuff for this coming month out of miscellaneous income to bank charges that will include the credit card.
I know that those were credits,
Right,
not debits. They're
Right.
credits. So credits reduce it. But no, we have to pay those fees. We established, I mean, you have to pay a fee to the bank for every credit card charge that runs through there and, ACH payments. Banks charge a fee for all of that.
We do ACH payments?
Most of the,
Oh, y'all's ACH.
in your
Most
business,
ACH payments to
What's
our
that?
creditors. We don't take that from renters.
Draw it out of account, you draw it, people sign up for bank draft, that's what the ACH is.
Okay, yeah,
We
You
process
do?
it, yes.
I was misinformed. Okay, Michael,
Yes, sir.
You said, obviously, that, okay, on the last page, you get nothing, from, in terms of interest rate, from the Texas First accounts where we write checks because they just don't pay interest on checking accounts.
Well, I said obviously because it's 0.00. And yes, also, for these types of accounts, there really is not an offer of even, I know there are some personal checking accounts or other kind of business accounts that might offer a very low percentage. That is not generally available to us. Because of the collateral requirements, yes, ma'am.
They do account analysis, it all evens out, because the balance that we hold, keep in there offsets some of the charges, and like, we haven't been getting charged for like the last 6 months,
The fees are offset by any
Right.
return there might be.
so you're not getting interest, but they are adjusting it with account analysis.
Because of the collateral that they have to keep.
I don't know why.
Well, not only that, but just all the transactions that go through there, there's a charge associated with that.
Okay. The city is earning on 4 of our accounts between .2 and .3, and we write checks on them. There may be a better deal available to y'all may want to consider shopping. We,
100% if it's available.
Oh, yeah.
um,
Any way to make money and save money.
100%.
I'm all for
well,
that.
there may be something I'm not understanding.
Well, yeah, I don't know.
But I called the city secretary today and
Right.
said, how much are we earning? And but we have the city has some accounts that are so restricted by law that we're almost never gonna have a transaction in them. And, the bank can identify that.
So possibly that's why that account's earning some
So
interest.
there may be some opportunities
Yeah.
for the MUD.
There are
to
no
save some money
transactions
there.
on it.
Or
Right.
not,
Money,
I don't know.
any,
Because there's no
any
transactions,
type
that's
of,
why they
like a
would
money
agree to,
market account.
because they know that,
You're
yeah.
limited to the number of transactions that you could run through there, but then by the same token, you earn some money on it. But we don't, our tax account, our operating account, there's no way we're gonna be able to earn any interest on those 2 accounts. We might be able
Even with
to earn.
$750,000 that we're.
You can earn interest on it, and then they will pay fees on
Yeah,
every
pay-
transaction. And there's just,
And-
these are the
and,
arrangements that are available.
Right.
and as Michael said, and I'm not jumping in, but as Michael said, since this is public money, we can't change up here and go, oh, yes, that's a better deal. No, there's gotta be a
You could
trained
go put it in a
investment
mutual
advisor
fund if you wanted to.
because it's
and
public
then-
money.
pay the difference to the federal government.
Yep.
Yeah.
Yeah,
And then at the
exactly.
same time violate all the collateral requirement law.
Right, so,
You know, they're conservative accounts. Now, I'm all for trying to get something a little bit extra on these you send us the information, please. Lydia, or to you, Richard,
Yeah.
John.
Yeah, sure.
Let's
Yes.
look at it.
Yes, could you supply that
And see
information?
and run it to ground.
Yeah.
If they can't meet certain
Yeah, I mean, it might be worthy, it may not be. So
requirements,
it's worth-
or if
it's
they,
worth looking
it's not structured
Sure.
the best way, well, then, we'll look at it. But there's no reason not to consider that.
When was the last, Bob, you had a reaction, you remember the last time we looked at that, the bud looked at that?
It's been a few years since we went out for proposals. You know, we used to be at Moody National Bank and the fees got to be too high and.
Right.
And then right around that same time, we were looking to do that loan and Texas First just gave us a much better deal. And, you know, cause we were paying like probably pretty darn close to $8,000 or $9,000 a year in fees,
Right.
with Moody.
Yep.
you know.
Banks love their fees.
There's only a handful of banks that will even accept your business.
Yeah.
Yep.
Yeah.
Yep.
Because of the pledge collateral is expensive to get.
Right.
So when they dial in the cost of buying pledge security, buying
But
collateral
there's a few.
securities.
We can shop it. There's a few. Texas First is one of, I think, 4 I see most often.
And the Fed raised the prime 0.25 today and anticipates 2 more raises
Yeah. That'll do good for taxable.
over the course of
Well,
this
it's
year.
good for bonds.
I think that's calendar year.
Not good for bonds.
Well, that brings up a question.
Sooner
if
the,
it's-
that's for y'all.
Do we have variable interest debt?
No. All of your debt, once it's sold, is fixed.
Okay.
Now, the timing of when you sell it, it is the market rate.
Oh, that's right. And we can't sell our bonds yet because that's in process. So we got.
Well, I mean, the soonest you could sell it from now with an engineering report working on it would be, months from now. But the rates are still historically low.
Right now.
Yeah.
There are no 9% rates out there
No.
or
Yeah,
anything
but,
like that.
Yeah,
And they used to sell bonds at 7 to 9%.
they did, yes, they did.
Okay. Now,
It was a moneymaker years ago.
we make capital payments on the old bonds annually and interest payments quarterly? Is that right?
Biannually.
Twice a
Biannually.
year.
So you have a spring payment of just interest and a fall payment of interest and principal.
Okay.
That's how every municipal bond I've ever seen is structured.
Is there any would this be for you, is there any statutory requirement for, fund balance for emergencies?
Oh, what it is for your, frankly, a great deal of that has to do with your investment potential and the ability for you to sell bonds. If you have 0 reserves, no one will buy bonds from you.
Right.
So a great motivator on this is essentially your credit rating, if that makes sense. The district's credit rating and what people and investors, your financial advisor, what your auditor wants to see means you won't go under or run. If you have no reserve, you can't run a deficit even for 1 year. That kind of issue, your auditor will throw up red flags. But no, the state isn't gonna come after you first necessarily. You'll go bankrupt or you will be unable to finance or find bank lending. So, rule of thumb, that I think most financial advisors would advise is 50% reserve minimum. And that's on your operating fund. My very first note I have for today is a discussion on your 100% reserve. I like 100% reserve, but
Percent of what?
100% of your annual budget.
Annual, okay.
So when I
So
use
we've
a
got about-
percentage, you
we've
have
got
a
about
6,
1 year right
you have a
now.
1-year budget. So 50% would mean if you, major catastrophe, you have 6 months of your budget. Now, that's true and untrue because, perfect example, some of your expenses are not level throughout the year. So a 6-month, reserve, a 50% reserve of your annual budget, you could use that in 4 months because you have a lot of upfront annual costs and insurance premiums, things like that. At the same time, you are in a disaster zone, hurricane zone. So for you to have a 50% reserve is not as comfortable as somebody up in Spring, Texas, having a 50% reserve. So
It's important to have.
I would never tell you to have a 200% reserve. I'd tell you to spend it down. If I walked into a district that had a 200%, or even 150 or 125. But I think it's very appropriate for you to have 100%. Now, if you want to use that flexibility, I don't think that's a problem at all. If you want to, manage that and move a little back and forth on it, you do have that wiggle room, and that's a decision for the board. But as far as financial planning is concerned, I would say my opinion in this part of the state, your floor would be 75%. Because catastrophic disaster, just you don't have any revenue.
Understand that? Totally understand.
That's my opinion.
So they've got 250,000 to play with.
I mean, potentially, now it's all, you spend it down, it's just, it's more spreading it out, but yes. I would say you could spend that down incrementally or adjust some fees or taxes, but at the same time, depends on the need and about the relative, what are you taking away from to get that?
Right, to get that.
If there's a,
Yeah, it needs to come
people
from
save
somewhere.
$3 a
Right.
year and it drops your reserves down to 75% over 5 years. Is that,
Right.
these are the balancing acts of
Right, yeah.
of the fiscal
Right.
management here.
Robert?
Question for
Yes, sir.
Michael. Michael, you made a remark that you only pay your principal one time a year. That's the way all of them are set up, but, they don't have to be. If the fund balance can be achieved to where this thing, your principal could be paid twice a year, you'll end up paying these bonds off a little bit sooner.
These are,
And that is something that can be set.
of course, just like your double payments on your mortgage. These are not structured that way, and I'll be honest, I don't structure them. The financial advisor markets them. The market is pretty fixed. The structure for these types of bonds are annual principal payments.
I get that.
And,
That's for the bondholder, but.
Correct, and that's
it
what
could be
mark.
done Even though they're structured that way,
I don't know whether that's marketable or not. That is not my area of it.
but as an entity here, even though you market them as an annual payment, the MUD has the option and capability to prepay that principal on
So,
those things.
I believe what you're talking about, so you have optional redemption on bonds. We call it defeasing bonds. It's essentially prepayment. That is not allowed for the first, depending on how they're sold. It used to be 15 years and it's 10. Now we try to get them down to 7 years. You cannot prepay bonds for 7 years after you sell them. That gives some security to the bond investors, the institutions that buy them.
Right.
But that's as short as it gets, and it's currently.
Right.
After 7 years, you can prepay. You can start to prepay off certain maturities, if you are gathering funds separately. if you're talking about planning for paying, as far as trying to make a principal payment early, your paying agent will not accept it, but you could certainly structure your debt service account with high interest structured CDs to, to mature at only certain times during the year. Or transfer operating funds twice. There's no way to pay, it is not a mortgage servicer. They will not accept it in the spring. You cannot pay the principal. Now, if you want to pay into an account that we manage early and gain a little bit of interest on it and know on a fixed rate, you could pay in, 2% less than the actual principal payment. You paid that in the spring on a 6-month CD, and then you have paid 2% less when it becomes due and you pay it off in the fall. These are more complicated structures. It's just not generally, very few people go to the trouble.
My question was, and it's looking out for who pays these bonds. That's me. Okay, so you could market it that way to start with.
I don't market them,
No,
but
I got it.
I would certainly ask.
I got it. It could be
I've
marketed
never
that
seen 'em.
way,
Have
and
you?
it could be done in public auction also.
No, these are publicly advertised and they are bid on by confidential bids. They must be bid on 2 different ways. One in the bond market register. And there's only, it's not like 20 years ago when an individual could go buy these bonds. I suppose that's possible. Again, I'm not the one bidding them and collecting the bids. I'm the agent for the district. Your financial advisor is the one that handles that. But only institutional investors are the ones buying these because of the certain legal requirements behind them. And they're not even packaging them up into people's mutual funds very much anymore. They're really being used as their federal collateral requirements, so that, that gives them the backing to do their ordinary banking transactions, holding their funds. It's just, things have changed, and I know I'm young. My family's been in this business for 50 years. So, I don't have firsthand knowledge of, experience with it, but I hope I learned enough by osmosis.
I just know y'all's firm represent 2 other MUDs that we deal with.
I don't know of any that pay 2 principal
Maybe
payments a
private
year.
placement.
Yeah, private placement on a refunding, absolutely.
Yeah.
But that's on a refunding bond of an existing debt, and it's only a portion of the maturities. You can do that by private placement. For new money bonds, they must be publicly advertised. So when you come up, you guys don't have any long, old, high interest rate debt. You have very little. And frankly, I doubt that you would ever refinance, a 4% bond if you sell something in the next 12 months. But if you did have 5 or 6 or 7, and they were older bonds, you can privately place or do negotiated sale for certain maturities of those old bonds, as long as you achieve, at least 3% of savings in present day money, present value savings. So,
And those are things that
God
a financial
I would actually
advisor
say, God forbid we ever are able to refund 4% bonds, because that would mean there's a lot worse things going on in the market. Those are historically low rates.
But technically, you could market it for.
No, legally you're required to publicly advertise. Now, I think you could, yes.
I'm saying you're technically.
I think the financial advisor could do it. I don't know if they would. I'm happy to ask them. I don't know. I've just never seen it.
At the next board meeting on the 18th, we'll have the bond underwriting here to kind of talk us through that. That's on the agenda.
I think that's something we really need to discuss Monday.
Yep.
Moving forward, we need to kind of get this figured out. So,
Any other questions?
I got one more.
One more, okay?
Lydia, page 15 and 16, is that an exhaustive list of our budgeted expenditures?
This is the most detailed, yes.
Where's the canal survey?
The canal survey is included in, the capital outlays.
That's on 17. Okay, so that is,
Yeah.
so that's almost, okay, we totally budgeted 230. And
Yes,
so that's
yeah.
engineering for all the other projects plus the canal survey. Okay.
Right.
So Schedule 1 includes this page 17 as well.
Yes.
Okay. And if y'all, and Carol Palmer is our financial advisor.
Terrell.
Terrell. Ah, okay, that makes a lot of sense.
I'm not sure what makes more sense now, Lou. I guess the pronouns make more sense. Carol's a boy's name too.
Yeah, oh, yeah.
It is. Thank you. That's it. That's it for me.
All right,
And I have
what question?
what goes into payroll taxes other than FDIC?
Liddy?
It's,
Social Security.
it's FICA, which is Social
Yeah.
Security, Medicare, and, state unemployment.
Because sometimes, on some of these, the
We don't-
payroll
they don't-
taxes are 20% payroll, as opposed to 7.65.
It's probably because we didn't totally break out the payroll taxes between administrative salaries and operating salaries for the whole year. We were lumping them all into one account, so that's probably the higher one. So while we have now allocated payroll taxes for the current months,
looking at that,
we did
that's
not
right.
go back and retroactively pull all the rest of them out.
I noticed that a few days ago.
I've
We
seen
need
that
to
too.
look at salaries
Needs to
for
be broken
both
out.
It does. This
operating
is
and
too vague.
administrative, and then multiply that.
This is,
helpful
well, it
for
is,
everybody.
it's the, this is, you're not seeing
I don't
the,
think
you
these
saw it
numbers
last month at the meeting.
There are none that
The-
are under 7.65.
every payment for the month out of your operating fund.
Right.
Overall, what you have is
Every
9.9
payment is there,
overall.
but then they are allocated to budget items.
Right, exactly, right, yeah.
Presumably
there's
that will
not-
straighten out, but the intent is not
Sometimes
to
they do their best guess, or they lump multiple
Social
different things
Security
in.
well figured,
It's just,
Medicare
it's
and
a,
state unemployment.
it's just
I don't know,
a
we have,
management
like,
decision
year
on
to
how
date,
much
we have
detail you want on your budget.
50,000.
Yeah, pretty much, yeah,
And
because,
payroll
yeah,
taxes
I
is
mean, there's some
19.
folks that want a lot more
But some,
detail.
if you have different categories of employees.
I don't have a
those should be
calculator with me, but
I was gonna ask you, the
That doesn't
hometown
look
bank
like
right here,
20%.
since we know we're getting better, money off the tax pool,
4%. So
should
that's
we,
the under part on
move that over, or was there a reason that we needed to diversify and keep that in?
No, you're locked in right now. But I was gonna say 100%, I've got a list, and you gotta transfer it to either a different CD
Okay.
or into tax pool. I think it's good to balance between having a couple CDs and having tax pool. Tax pool can drop down to 0.5%.
Oh, okay, I didn't
You
know how
know,
volatile it was.
It took 5 years to get up over 1%.
Okay.
So it just got there.
that, in that 64,000.
And
is
CDs
just the
were doing better than
canal
tax
and
pool
the Canal
up until 6
survey
months
and
ago.
probably.
So you kinda, it's just about trying to hold funds, diversify a little bit,
Okay.
a little bit
What
of,
engineering fees?
Well,
it's just
the,
very
you know,
conservative
AI,
money management.
Yeah,
Or whoever our.
You can't make money on it anyway.
No, I understand.
AI.
so you gotta have a piece of that plus the one that's called engineering to know what fees go to AEI, so far.
Yes, I'd have to look at the general ledger, and I actually have that broken out for presentation.
Right, from Monday, yeah. Yeah, these are things we're hoping to discuss and try to, I'll get a little more detail for everyone, you know, so we don't have, you know, because I seen that too. Honestly, I forgot to ask that question, you know, the 64,000. But,
And you said that the, on a regular basis, you enter checks and revenues, are there accruals? And that's gonna be more, because when a purchase order is issued, you know you're gonna spend the money, but you may not spend it for 6
We
weeks.
do,
2
we do
months.
the accrual adjustments at the end of each year.
So you don't do it on a monthly
No.
basis?
No.
You're a cash basis only, and then if the bill, even though you know the bill is coming in next month, you do not recognize it until it is received.
That's correct, until it's paid, received and paid, because they pay bills every week.
So there's no 30 days payable. It's when a bill arrives, the check is cut within a day or two.
Pretty much, isn't that pretty much the case,
Yes, sir.
Sharon?
Yes,
Yeah.
And you show depreciation. Why do you depreciate?
Depreciation, in order to be in compliance with GASB on this statement of position, that requires the depreciation on the infrastructure. But not on the fund line.
This, I might be able to add one thing here. It is a goofy auditing requirement. Was that essentially correct? That municipalities state their net position, and it is almost totally irrelevant to any operational, insurance, the actual value, cost of replacement of any kind. But you will get a one-page summary of the net position of the value of the district's facilities that are depreciated values, not replacement costs. Account balances minus God knows what. And it is just this, accounting principle spreadsheet that must be included in an audit. And so you brought it up, I believe, for that reason. A lot of auditors that come in and give the audit report make fun of it, but they have to bring it up and they have to do it.
So in reality, right now, the fund reserve position is the recognized reserve position plus the accumulated depreciation.
It's one component of the audit. It is not the final value of the district. It is right after the net
fund, the
position,
money
there
that
is
is
another
available to the
analysis of the
district
district
right now.
value, usually on the next page. What's that? I'm
The
sorry.
money that's available to the district is equal to the cash that is recognized plus the depreciation expense, which reduced that cash that is recognized, but it isn't real.
The depreciation value, I don't think is, it's an accounting measure. I don't think it's real because you can't sell these facilities. They have no market value.
No.
The real cost of them is their repair or maintenance or replacement value. And so that's always a negative. And so the cash, in answer to that, Mr. Finley, is the district is worth what's in its bank accounts, in my opinion, because nobody's gonna take over and pay anything
That-
for these
And
facilities.
that is different than what is carried.
But that's
as
not
the
an
cash
accounting
reserve.
principle, that's not an auditing principle. You know, nobody would, that's just my real world approach to it. It's worth what you owe and what you got. Nobody's gonna buy your sewer lines.
No, I don't think so.
And the $30 a month that has been collected since last September, I guess.
November.
Yeah, November, yeah.
That is in the revenues, so it's reflected in the revenues that are listed here, is that correct?
Yes.
Okay, and any-
It's $15 in the water and there's $15 in the sewer.
And anything that has been spent specifically against that would be where, or has
And
nothing
just
been spent?
basically in the capital outlay section.
That'll be detailed next meeting.
That's that detailed report we're gonna.
We're gonna,
have
yeah, we need
Monday.
to break that out better.
There's nothing in the
Yeah.
capital outlay that has done anything for the sewer plant.
It's planning.
Other than the
It's
It's
previous
the design.
expenditure.
It's the engineering.
It's the
it's
design
engineering
stage.
fees.
Yes,
But we're
that's
gonna
all.
break that out as best we can, right?
Right,
Yeah, that's
on
what-
Monday.
You're
yeah.
gonna get,
We're
I
gonna
sent that to you.
extract, I know, I've seen it. We're gonna extract that out.
Yeah, I think it'll be very important to present
And
that one.
the engineering is the design phase for that plan. But it is not broken out here.
As a realistic thing, we talked about improving
So, the district has the ability to essentially reimburse itself on the operating funds.
So you can consume the reserve to.
And then knowing that you
take care of
will
that cash.
issue bonds and replenish those reserves, and basically as a one-off transfer from the time you get bond funds and replenish those reserves, and they're separately tracked. And that might, I understand why that would be concerning if it was not, it's not like you might get denied for that mortgage. If the district puts its bonds to market,
That's
it
probably
will
not
be,
realistic for us.
that they can be sold. And so at the time, if you had 25% reserves, I would say you wait until you get
Yeah, right.
your bond funding.
Yeah, right, exactly,
But
right,
to float 6 months of essentially preliminary project planning work and maybe early stages of very early construction phases. How many pay estimates do you think we'll get through there, Harry, in 6 months? If they let it, if they went out for bid
You probably
tomorrow.
get 4, and they'll probably represent 35% of the total.
Right, and so if we can,
35% of what, 1.86?
Yeah,
Because of
so if-
making down payments for all the capital equipment.
right, and so that might be a few $100,000, and you've got 1.8 in your reserves, and it'll be immediately
But it's
replenished
just a
upon the
cash
selling.
flow
But
issue.
these are very
That-
rough
that
numbers,
Right.
and that's,
Right, it's cash flow, right.
it's just a cash flow issue.
Yeah, it's cash flow, that's all it is.
But once, if you decide to do it, yeah, that is a darn good question, because that is the real process flow of this stuff. And in answer to it, you can go out of operating and reimburse with bond funds. That's the short answer.
Because of timing, it would be easy to create a cash bond, an anticipated cash bond.
Well, no, you don't wanna do, you don't wanna do a ban on this. That's a loan out on a future bond, a 1 year with interest. I only recommend that if you have somebody else paying for it, paying the interest for it. Like a developer who needs reimbursement and you're paying it back, and they wanna pay the extra cost for that ban. This is, you have the funds. I don't think you're stretched thin. Also, the reason to start and not just totally postpone the project once the design is done, you don't want it to go stale. I don't know if they believe that will be the case, if there'll still be good plans in 6-9 months, or the pricing might be consistent 6 to 9 months from now. That's a question for your engineer. But sometimes they want to go out for bids now because they think they might have to do additional work if you wait 6 to 9 months. That, I don't know if that's the case or not. Maybe you can sit on it, wait until you get the bond funds. I don't know. Fair enough.
Yeah,
Is that fair?
these are things we need to discuss in much detail Monday night. It's on the agenda already, to talk about it in greater detail. Because, I think we all have a lot of questions. Where, how to handle this and where to go.
These things are normally considered an execution timing on
Right.
projects like this.
We're not in favor, the board is not in favor of going after a $4 million bond issue right now and then throwing it to AEI and saying, have fun.
Yeah.
We're no way, we're gonna watch every
Yeah.
little penny.
Yeah.
And that's what that's what we're doing. We're saying, no, we're gonna look at every little penny,
That's why
every
we're
little
having the
project,
training,
every little cost,
Yeah.
because it's your money. It's not,
Yeah,
it's not,
exactly,
it's
yeah.
easy in the business world to throw a bond up and say, good luck, I'm not gonna be here in 20 years. We're not gonna do it that way.
Yeah.
So that's what our opinion is.
Yeah, we're trying very hard to make it very,
I mean, we've all
Transparent for
talked
everybody.
individually, and that's, all of our goal is to say, we're gonna spend $100,000.
good stewards of
We're
everybody's
getting
money.
$100,000 worth of profit, worth of stuff.
That's the happiest I've ever seen you.
I'm even gonna say something nice.
I think that,
Good thing you're sitting there.
Let me ask
No, there wasn't.
Jerry, Commissioner Jerry? Okay. We're gonna adjourn then?
No, I got one more thing to say that's actually nice. I really appreciate you actually posting this information so that people can look at it and understand what's being discussed.
Appreciate that.
Historically, there's details like this that, on page 3, that's pretty good, right? Okay, yeah, everybody in favor? Good, okay.
What we're gonna do for the future is not post this. What we're gonna do in the future is I've asked Lydia to make a summation, one-page summation, money in, money out, what's in reserves, where we spend it on, where it's at, what's your capital outlay, so you can see one page. You don't have to go through 4 or 5 pages, one page. And then that way, everybody looks at one page organizational report, how many cutoffs, how many people bitched, how many lines broken, how many stuff we did, et cetera. So we,
And those
so we
will be
all can,
available as
so we all can
handouts
see
at
that
the
when we
at the
talk.
meeting, right?
What's that?
Then those will be available as handouts at the meeting.
They'll be online, and we'll make 5 copies available for the people
Okay.
whose printer breaks like mine.
When do you expect to get those online?
How
Oh.
far in advance?
Probably, we may not be able to make it for this board meeting, cause I've gotta get it approved by everybody, but maybe next month.
Also, this is not the ordinary format of her monthly report.
Right.
Right.
This is a little more
So we're,
detailed.
so on Monday, whoever's out here is just, has their wits about them and that's it.
I'm gonna try to put something together for Monday, but I probably will only be able to bring it with me.
And if the board has it to look at, it certainly would be available for a handout. So if a handout isn't available, you won't have anything else to look at either.
There'll be something to show you, guaranteed. Lydia just came back from New Orleans, and she hasn't, she's still recuperating from it.
Is that where you're drinking all that water?
So you have to understand is that, you know, when you go there, you don't talk about what you do, so. So let's adjourn. I appreciate everybody coming, and so meeting's adjourned.
Wait, you gotta get a motion.
A motion.
Oh,
Um,
that's right.
And actually, executive session to discuss legal matters,
Okay,
which I will explain the context of, but it's not recorded. We're allowed to go into private session with just the board members and the attorney to discuss legal matters.
okay. We'll go to a private
You
session.
have to have somebody make a motion to adjourn.
Oh,
Well, we're
We
not
can't adjourn
adjourning.
We're not
We're
adjourning
not
yet.
We're not
adjourning.
adjourning.
We have to make a motion for
We're
an
just
executive
leaving.
session.
Going into executive session.
I'll make a
On
motion
the-
to go into